The Allianz American Income Fund performs well during different market scenarios. This speaks to the core competencies of our team on the credit research and analysis side in selecting the best risk-reward opportunities in the investment-grade corporate and high-yield corporate space. Also, the intermediate focus along the yield curve helps to protect against interest rate risk. We do not venture into more obscure market parts of the fixed income market in order to find enhanced yield. By doing this, we feel we're putting the core objectives of the fund at risk. If we're looking into less liquid or less visible assets within some of these structured products. We've seen the return profile of the fund operate very well in these different market scenarios. If we're looking at what's taken place since the inception of the fund in the equity markets, where there are months when the S&P 500 has had a negative return, the average return has been negative 5.19%. In those same months, the Allianz American Income Fund has had a return of just negative 49 basis points, clearly outperforming the broader equity market and showing that downside protection and ability to preserve clients' capital. This was even more evident in the first quarter of 2020, when the S&P 500 was down over 19.6% and the Allianz American Income Fund was down just 4.3%. Again, the allocation to the investment-grade corporates as well as the treasuries supports that or provides that downside protection. If we're looking at how the fund acts during credit market sell-offs, it also performs very well. The average return in the negative months for high yield since the inception of the fund, which is March of 2017, we have seen high yield return negative 1.73%. We relate that to the fund at down just negative 58 basis points. You can clearly see the outperformance in the credit markets. This speaks to one of the things I said before, the core competencies of the team and the ability of us to select the appropriate credits, as well as a combination of asset classes providing that downside protection. When we look at what happens during rising interest rate markets or when the 10-year Treasury is selling off, we've seen an average return of negative 82 basis points for the 10-year Treasury. During these same months, the Allianz American Income Fund has had a positive return of 25 basis points. You're seeing that clear distinction of a positive versus a negative return of the fund and the interest rate diversification benefits that this fund provides relative to other core fixed income allocations. The intermediate term focus, as well as the 30% allocation to high yield, which provides that enhanced income and interest rate diversification, as it is negatively correlated to the 10-year Treasury, is clearly evident in this return profile. We continue to be very confident in the ability of this fund to perform during all market cycles and provide an attractive level of income relative to other core fixed income allocations.